From the morning reading, futures sink after China export data. The SPX finds support in a key reversal day. Ulta crashes to the upside on raised guidance. Airline stocks soar following Delta. 4 of 10 sectors moved higher on Thursday. XLU, XLRE, and XLV were the strongest sectors, while XLF was the weakest sector. Oil futures rise 43 cents to close at $50.44. Breadth weakened compared to the prior session as decliners led 2025 to 1027 on the New York Stock Exchange and led 2033 to 791 on the NASDAQ. On the S&P 500 snapshot, a sharp decline and partial recovery. U.S. equity futures were tanking before the market opened, and the benchmark S&P 500 plunged at the opening bell, hitting its negative 1.14% intraday low about 30 minutes into the session. The index then struggled steadily higher to its minus 0.05% intraday high at the start of the closing hour. But that final hour saw some renewed selling, and the 500 closed with a 0.31% loss. The pundits at CNBC attributed the reversal to a similar sell-off and rise in oil prices. The yield on the 10-year note closed at 1.75%, down 4 basis points from the prior day's close. Stocks have, so far, broken down from their range. After forming double inside weeks, the S&P 500 is at risk of breaking down out of the range. When it has done that previously, it tended to continue lower in the shorter term and then reverse those losses longer term. The opposite was the case for upside breakouts. The S&P attempted a reversal on Thursday after gapping down and sinking to a multi-month low. The S&P closed above its opening price. Reversals like that look nice on a chart but have been inconsistent predictors. A handful of times similar reversals occurred in bull markets. The S&P ended up making a lower low every time, and it usually took weeks before finding a sustained bottom. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 5:49 a.m. Mountain Time, and I'm recording this in preparation for the market day of October the 14th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into our morning report. And at the time of this cut, futures were up. On the S&P, they were up right about 10 points, a little less than 0.5%. Russell futures are up about 0.5% as well. NASDAQ is up a little over 1/3%, and the Dow futures are also up about 0.5%. Crude oil's up right at 1%. The euro's down about 0.4%. The long bonds are down about 0.6%, and gold is down almost 0.25%. In overseas action, let's see here. I was just double checking the date on this. China, this is open. It is a current 10/14 date. So anyhow, China is up just above scratch. Hong Kong is up a little less than 1%. Japan's up almost 0.5%. Germany about 1.6% for the best performing market. United Kingdom is up a little less than 1%. In terms of macroeconomic reports of note for today in the United States, you have core retail sales, PPI, FOMC member Rosengreen speaking, University of Michigan consumer sentiment, and then during the day, Fed Chair Yellen speaking. So really pretty good cluster of stuff happening on a Friday. In terms of the current volatility conditions, you can see we've been, increasing VIX phase, and short-term VIX is at a 14.07, and the skew still relatively benign at below 125. Now, the VIX the regular VIX, and we'll take a look at that chart in just a moment, did pop up to right at 18 during the intraday yesterday, but then with the key reversal action on the day, there was quite a bit of fall off from the extremes. So we continue to increase in the VIX, and yet at the same time, yesterday was a bit of a, at least short-term, reversal day. You also note that the IV percentiles continue to climb. In fact, the S&P is up to a 35. The first time we've seen a figure that wasn't in the red in that bottom third in quite some time on any of these index. The Russell was a 33, the NASDAQ a 29, the Dow a 33, just slightly lower than that S&P. The standard deviation moves, there were no standard deviation moves on a close-to-close basis. That certainly doesn't say the intraday didn't have a fairly large range. They certainly did. But when it was all said and done on a close-to-close basis, most of these were actually dojis or very, very small bodies. In fact, let's go ahead and go to the charts. And here you have the S&P futures. And you see yesterday's doji type candle, very, very small body. But look at this long wick, and look at where the wick reversed. Right at the bottom of this area of, at the time we drew it, way back, this was the area of resistance. Well, you expect that the area of resistance becomes the area of support, and it turned just below the bottom of that at 2107 and change area, just above the magic number of 2100. So pretty interesting place to reverse. And then you see the follow-through action today. So right now, you look for a confirmation reversal candle pattern, and right now that is in place, and we're up pretty nicely from that area. Now, that being said, some of our morning reading authors kind of spoke to these kinds of patterns and led to believe that there was almost always a lower low before finding overall support. The tricky thing here is the context of that. If we get much of a lower low, we really bring in the potential to break this area, break below the cloud, and then probably bring into question whether you could drop another 100 points. So these are interesting times, and while this is a short-term reversal pattern, it may not be over yet. So just kind of keep that in mind. And indeed, we're going to remain with hedge risk level 1 in our opinion in that area. We'll get to the daily report in a moment. But take this for what it is. It's a short-term reversal pattern with, at this point, a confirmation of that reversal. We'll have to see if we can get a higher high. If this is truly a reversal to the bull side, then we should get a series of higher highs and higher lows to be able to take this on and break these overhead resistance. If we get a lower high and then that lower low, then that would seem to say that this isn't over on the down move and we're starting to further deteriorate potentially. So it's an interesting day yesterday. It's been an interesting week, and we really don't have resolution yet on this. There was some key professional activity and reversal patterns yesterday. Volume certainly was better, and yet at the same time, we're still left with a bit of a quandary. This is what you get when the market is not cleanly trending, and it certainly hasn't been a clean trending market for a long time. Dow still also in this cloud pattern, but you notice also the doji with the long reversal wick here, and thus far the confirmation. So very similar pattern to our S&P. Then we have the NASDAQ, and the NASDAQ, of course, has been the most bullish one of late. And you also had a reversal pattern there, not really quite so much a doji, but certainly a big wick reversal pattern, and this is so far also confirming with this morning's activity. We'd like to see what the all cash market, all participants do with this move up. Sometimes the overnight can tend to kind of accumulate some shares, as it were, and going in quotes the wrong direction, and then as soon as all the cash participants come in, the whole thing just gets wiped out. So we'll see what all participants do when the cash market opens. Now the Russell, of course, has been deteriorating. It was staying nicely bullish, not quite as bullish as the NASDAQ, but that has broken down and it's now down in the cloud. And you notice not quite the same kind of candle yesterday as what we had with the other three indices. And while this is so far, that is a bullish reversal confirmation that right now would be piercing line, and certainly could easily be a bullish engulfing by the end of the session if things were to continue to build in a positive direction. That said, that's certainly not as strong a reversal as what we had incur in the other three indices. Let's take a look at crude oil, and certainly this is what CNBC was saying was the reason for the turn. Very, very interesting here where you have the breakout. It went up to the 52-week high, fell back. This is a classic bull flag pattern. It's also a classic breakout and return to test, and it's tested this level now several times within a few cents. And remember, support in the area is not, we like to, take examples like this where it's practically to the penny, but it's usually an area, especially with the realm of the algo traders running stops around obvious locations and picking up, small volumes from mostly amateur traders who have small stops in place. And so you get a little bit of an undercut. And then, of course, part of this also, I might not be drawn perfectly, but you get a little bit of an undercut, and then reverses, nice big green day, and so far reversing that. This is a bull flag breakout with today's activity, and normal, your first target would be right up here at the former high, and then the second target beyond. So that certainly is in place, and everything would seem to say that we should go through probably this 51.67 this time. And then, we've had some analysis recently that was suggesting that the long-term target might even be $60. You might have to wait a long time to see that 60, but certainly it's the pattern is supportive of eventually going to that target, at this point. In terms of gold has had the breakdown and has just simply consolidated, and certainly is not rushing in to kind of show that the bulls are just whipping people off and then taking it up like we saw back here. It's taking its time to be able to take off. Now this one certainly also took its time before came in with this big reversal action, and I kind of expect to see that at some point. But gold is continuing to be a very, very challenging chart. In terms of bonds, here's another one that's not behaved very well. In terms of during the equity sell-off, you would have expected more of a move up from bonds. It did not behave in its safe haven status. So bonds are, not doing what you kind of expect right now. So that's a bit of a danger sign, and probably kind of speaks to the larger, more fundamental thing that's going on with bonds, and this expectation of higher yields, which means lower prices in the long bonds. So this may be, that the beginning of that move that's been expected for years, where bonds were going to start dropping in value as a result of increasing interest rates from the Fed. Now, if indeed we are starting to finally see that big giant unwind, this could be a big macro move. We'll have to wait and see if we start to continue to build on this move. But people have been expecting that move for 2 or 3 years and have been on the wrong side for a very, very long time. And So let's be careful before we're going to kind of pronounce that move has finally started. So many people have been wrong for so long. And then finally, volatility. And you see the spike, the intraday reversal, and then that's continuing to fall today. So it's certainly it's a reversal. It's not yet down into the kind of really calm bull market range of 12 to 15, but it's certainly heading that way. I think that's probably all I want to say about that at this point. So in terms of the daily report, what changes did we have from yesterday? Some. We're still market phase 5, the break of diagonal support. We have not yet reobtained, the previous pattern or anything like that. So no improvement there. No improvement in our market timing signals either. All three of them are still, decidedly either bearish outright or, quite mixed. The first signal coming from IBD, uptrend under pressure, certainly is a warning sign. GMI index went to an outright sell signal on 10-12, and you see the score is still very low at a 1 out of 6, and then on the GMI 2 index, a 2 out of 8. Stock charts decision point scoreboard. You see we actually had 2 new signals yesterday with an intermediate term neutral signal, and then on the NASDAQ a neutral as well on the short term coming into play. So bottom line, you take these signals, you have neutral to bearish on all 4 of these on the short term. On the intermediate term, you have some neutral, a little bit of bearish, and some bullish, so very, very, very mixed. And then long term is mixed on all of them. So we continue to have, a really messy picture from that third signal. Overall consensus is at best neutral, and at worst a slight bearish bias would be my suggestion on those 3 market timing signals. Position sizing opinion still at 50%. We certainly had a chance to close above 18, but backed away from that yesterday. So the volatility model position sizing opinion comes in at 75%. In terms of intermediate term market posture, the reversal yesterday not yet reflected in the intermediate term market posture. It really is at this point just a short term reversal and has not yet proved itself to be an intermediate term trend change. We need to see higher highs and higher lows to be able to kind of see the intermediate term trend change. In terms of the market posture, they're not looking at necessarily at that kind of signal, but that certainly has not turned. The S&P still strong bear, the Dow strong bear, and then now the Russell has also deteriorated to strong bear, with only the NASDAQ as a weak bear. This is also reinforced by a weak bear sentiment line, so not terribly positive for the bulls. We remain with level 1, the caution light level, with the hedge warning status, though we're prepared mentally that we could see some bullish action and improvement. We're wanting to see that proved out in the price action before we release this concern. We're particularly right on the precipice. At times yesterday, you were right on the precipice of being able to say that you're probably going to go to level 2 with the close, had not that reversal action come in when it did. In terms of strategy opinions, VIX is in the acceptable window to initiate new positions, though certainly things have started to get a little juicier lately. So for novice traders, just kind of be cognizant of your overall price action. In terms of cover call strategies and put sellings for novice traders, not acceptable conditions at the present time. Remember, you have a strong bear intermediate term market posture that then creates this not acceptable opinion for new positions for novice traders. Now, aggressive traders might consider super conservative positions and then also legging into positions with out-of-the-money put selling for their covered calls. Might also want to keep that position size and the scale that you're willing to own, maybe even reduce position sizes. So something to think about there. Now, we'll look for change and rate of change. You hear me repeatedly talk about that. And certainly we saw some positive change yesterday. A number of the warnings have fallen off. We do have high distribution day counts on both the NASDAQ and the S&P. The VIX phase has been increasing, so two important ones there. But this is not a sea of red at this point. So, you know, if we're going to go to level 2, we're going to see a lot more red here probably. In terms of the trend area, you've got this market phase 5 and the strong bear and the very high new low count from yesterday with 427. And the key intermarket risk aversion indicators, we saw real deterioration in this yesterday, and 3 of the 5 indicators are now in a risk off posture. From sentiment, relatively benign on stocks, bonds a bit extreme. Overall fear and greed index is in the fear category and certainly dropped from the previous close of 45 down to 35, so kind of keep that in mind. In terms of sector action yesterday, it was actually pretty interesting in terms of this is what we normally expect during sell-offs, is that people load up on the more defensive. And we talk about our stubs, the consumer staples, there it is. The telecom, which was mixed. The utilities, which was the best performer of the day, and look, not a single red. And then also, now you have your real estate sector that's been newly created, but is also kind of an interest rate sensitive kind of area, but more generally associated with the defensive area. And then, of course, long bonds, which isn't represented here as a sector. So, this was kind of a classic stubs on day. And then look down here at the other end. These are all the high beta sectors. So lots of red, lots of breadth in the red in those sectors that were, kind of the risk on normal areas. So here you had a key intermarket reversal day, and yet what were they loading up on? They weren't loading up on high beta. They were loading up on low beta defensive oriented. So that would seem to suggest that these comments from the morning authors that we might get indeed a lower low, this would seem to make some sense within that potential context. So just another sign that potentially we're not maybe done. In terms of the market postures by sector, you notice the short to intermediate term, there is no green anywhere on any sector there. So this has continued to deteriorate and should also be a sign that the end is not yet here potentially. In terms of the percent change here, you see most importantly, I think, the 5-day, 1 month, 3 month, a lot of red here. So, certainly have not been able to find any particular area that has consistently been able to perform across all these different time frames. So it's a very, very difficult market to make any headway to the bull market side at this time. So that's enough for today. We're up over 20 minutes. I don't like to go that far. One thing I will mention to you is under the YouTube, and hopefully you're subscribed to the YouTube channel, and you get notifications that new content is there. You just hit the little button when you get to the YouTube channel, and that's the website to our YouTube channel. But if you go to this little button here, make sure you're playing it in high def. But the other thing is also under those settings, you can play back the video at 1.5x. And generally, most of the comments that I have, and I'm very kind of structured in how I give them, after learning and listening for a number of sessions, you'll kind of get the flow of this information. And much of that you can garner what you need from the information and listen at a faster speed, about 1.5. Most people can listen and comprehend and yet and get that video done in about 13-14 minutes or so instead of going 20. So a couple hints there about when these do have more information to get a little longer. Disclosures, as always, hit the pause button if you need more time to review the disclosures. Also note the hyperlink down here for the full set of disclosures. Manage your risk. Look for us to come back on Monday for the market preview from Falcon Global. In the meantime, good trading.